And good morning, good morning, good morning. Welcome, welcome, welcome to another episode of Money Matters. I am your host, Nev, and today is Thursday. So, Thursdays, well, we do real estate overviews and reviews and market and what's going on and start to figure out the way of how can we get into this amazing asset class. And today, of course, we're going to be doing that. But, I would be amiss if I didn't start the show with taking a look at what Bitcoin did you watch it yesterday? Like, actually watch it? Because it was pretty cool. I will tell you, call me geek, call me nerd. I'm okay with all of those names. And I was sitting here watching the 1 minute candle chart kind of move, and it was just so much fun to actually watch it. And you walk away for a few minutes, you come back, and all of a sudden, you're like, it was out of the screen. You gotta, like, all right, I gotta scroll on up again. It was the coolest move ever. And of course, we're going to take a brief look into what Bitcoin did yesterday and where it could be going. Still in 2020, we still have a little bit of time for it to do some crazy and wild things in 2020. And we're going to be talking about potentially what could happen. Again, my crystal ball is broke. This is not financial advice, but we're going to take a stab at it nonetheless. And then we're going to switch over to real estate and kind of wrap up the year and see where things have gone and what we can expect in 2021. I do want to welcome everybody who's watching this live or even watching the replay. If you're brand new, please do subscribe. If there's some sort of notification button, please do hit it. If you're listening to one of the podcasting services, welcome as well. Do a review, do sign up, and let's do this. All right, y'all. Well, who's excited to go over what's going on in the world of money? I know I am. All right, let's take a look what is going on in the world of money. And let's refresh this because I've been refreshing, but it keeps moving. It keeps moving. OMG, it moved again. This is the most amazing thing ever. Ever. I don't know how I'm going to get anything done today because what I think is going to happen is I think I'm going to keep on watching what Bitcoin is doing and what's happening in the prices. So, probably the most exciting day ever was yesterday evening. Well, evening my time. It might have been today morning or, yesterday, like midday or whatever. I don't know when it was. But it probably was the last 24 hours when Bitcoin is like beyond cool because not only did we break over the recent or the latest highs, right? We broke over that $20,000 that we've been saying it's going to happen. And I even yesterday said it could even happen today. And sure enough, it actually happened yesterday. So what happened? Well, yesterday we did hit a high of $23,777. That's a lot of sevens. And personally, call me crazy, but I just think it's lucky, right? But it's saying it's a 560% return on investment since the March yearly low. So if you had purchased Bitcoin in March at that $3,000, you have 5x your money. Pretty freaking amazing. So what is going on over here? Well, Bitcoin is right now at $23,210.73. It is up a whopping 17.4% over the last 24 hours. And I say whopping because Grandpa Bitcoin typically doesn't move this fast in this short of a period of time. Although when he's on a move, he's on the move, It's hard to get him out of the chair. It's hard to get him going. But once he gets going, puts that little walker, he keeps on running, man. You can't catch him up. So just kidding. I just keep calling him Grandpa just because it is the oldest cryptocurrency, even though it's only 11 years old. So technically speaking, not even a teenager quite yet. Ethereum has done some amazing things as well. It's currently trading at $667.60, up 12.3%. XRP has mooned 23.6% in 24 hours. Even Tether is up, if you can believe it. Litecoin up 23.1%. Bitcoin Cash up 11.4%. Link up 12.3%. Dot up 8.7%. I mean, everything is up. You're scrolling down. CDI. That's it. That's one thing that I see down on negative. Let's see what the biggest gainers are for the day, and there's a lot of them. There's a lot of them, and Bitcoin is one of the top ones. So XRP wins the day at 23.6%. Litecoin is in a second position at 23.1%, currently trading at $101.73. Zen is up 22.4%. Nexo up 22.4%. Bitcoin 17.4%. Sell at 17.3%. Wrap Bitcoin at 17.2%. As you can see, there's a lot of gainers. I mean, I keep scrolling, and there's a lot of gainers that are in double digits. On the losing end of things, I think we're going to see a very, very few and far in between. Vite is the one that is actually in double digits, negative 11.5%. Yuma is in a second position, negative 3.5%. Luna is at negative 2.7, Pax negative 2.3, and then we get into 0 point something. So as you can see, really not a whole lot of losers at all, and some of the ones that we're seeing at zero, negative zero and that kind of stuff are actually stable coins, which I don't even think that it counts. So overall, super exciting, super positive news for the crypto community. Hopefully you are holding and hodling like crazy. Hopefully your bags are green and greener than ever. Most people are in positive at this point. And so, of course, what could potentially happen? So today is December 17th. It's a Thursday. We have what? 2 weeks left of the year, something like that. A little bit less, a little bit more. I don't know. My math is not quite working this morning. But in that period of time, what could happen? Well, a lot could happen. When it comes to real estate, that we're going to be talking about in a moment, not a whole lot. It's going to be pretty boring. When it comes to Bitcoin, well, things could get very exciting and very heated up. And of course, we're going to see. There is some analysts that are saying that we might stay around 23, 24. There are some analysts that are saying by January 1st of 2021, so basically in 2 weeks, we could see Bitcoin approach $30,000. So a gain of another, 7,000 or 6,000 something between now and then. It's absolutely possible. We could, of course, go down. We could stay steady. So, right? And you were like, thanks for the prediction, Nev. You are basically coming up with every single scenario. Well, that's because every single scenario could happen. We've never been in these uncharted waters before, so we don't know exactly how things are going to turn out. I am incredibly bullish. I do believe that there is a very good and high potential that we will hit anywhere between 25 and 30 to $32,000 before the year's end. There is a high probability of that. Of course, if it moves really fast that high up, there's also a potential and probability that we'll see it come back down, which could be a very cool buying opportunity. There are many analysts that are saying that next stop, so to speak, is going to be around 50,000, plus minus a few thousand at that point. At that point, we might see a bit of a more significant drop of maybe 30 to 40%, perhaps as much as 50%, which means that we could potentially go down to about 25. And after that point, there's a very high probability that Bitcoin is going to move up to about 100,000 plus. That's one of the analysts that are saying. Max Kaiser has been also calling for about $28,000 Bitcoin by the year's end. I'm saying it's absolutely possible. Like I said, I'm standing between 25 and 32 roughly. Max is probably right. But again, nobody has a crystal ball. Nobody can tell you with a great level of certainty. You cannot rely on these sort of guesses that everybody is making and predictions, right? Because it's just kind of fun to do it and see if you were right. And then you have bragging rights if you actually were right. But nobody knows for sure if that is the case. So please don't go out there and just buy something because, Nev or Max or, Susie, whatever, is saying something that is going to go up or down. Do your own due diligence, see if it makes sense to you and for you. I personally believe that Bitcoin is an amazing store of value. I don't know that I would use it as a medium of exchange. I don't know that I would want to. I mean, I would use it as medium of exchange if it's coming my way. I don't know that I would want to use it as a medium of exchange when it's leaving me. But then again, I never like anything that is valuable to leave me. I get very attached to it. So clearly, I have some emotional problems, and I'm okay with that. Okay. So, anyways, that's just kind of how I stand with the whole thing. I do believe that it is still a great time and a great period to enter the Bitcoin space, and Ethereum, I think, is going to go to the moon. If you take a look at both Ethereum, and actually, we can do that because I was playing around with it. Check this out. I was playing around with something. Hold on, let me share it with you. I apologize for the listeners only. You can't see what I'm sharing here, but you will have a link to the video in the episode description. So, of course, you can come and take a look, and it's going to be right around minute 10 or so. Okay, so what we're looking over here is this is Bitcoin, but it's a logarithmic chart. And you will see something very interesting, right? I've done a little bit of drawing. There's, of course, the chart itself. And you can see it doesn't look all that weird. What you can see is that we're having, thus far, we've had kind of like two peaks, right? Three waves, two peaks. And we're, of course, in a wave number 3. So the first wave is right here. That this was that from 2011 to about 2013, November-ish or so, right? And it was a very steep, sort of very fast, very steep wave that kind of happened. It hit that maximum thing, and then it came back down. And then from that point in November of 2013 till about December they're saying here November of 2017, but we know that we hit the high in about December into January 2017 to 2018, right? So you can see how it's a much smoother, like it's still on the upside, but it's not as fast, it's not as sharp, it's not as steep. It's much smoother, it's much more elongated, sort of that U formation thing. Now that we're entering this third wave is going to be even longer, even more elongated, even less explosive, but it is still going to move. And based off of kind of what my drawing is, I do think that we're going to come to about $250,000 a Bitcoin in this particular case scenario. Again, my modeling ranges anywhere between 87,500 on the low end. That's super conservative, all the way to about 350 to 400,000, which is, I think, super aggressive. Now, I could be wrong in both of them. We could be 50 and that's that. We could be 500,000 plus. So I could be grossly wrong, but I am just sort of like looking at the stuff and saying, this is most likely what's going to happen. So as you can see, it's going to be a much smoother, much more elongated kind of movement. Still amazing gains. And if I am correct, if we do go up to, 250,000 at $25,000 per Bitcoin, that basically means that we are looking at what? 10x, right? So not too shabby of a return if we're being completely honest. Now, the Ethereum, I do believe, has just as big, if not even bigger move. And the reason for that is because Ethereum hasn't even reached its all-time high. It's currently trading at about $670, which may sound like a whole lot of money, but it's really not. Because if you really think about it, we haven't even reached that $1,000 something, right? So we're still well below the all-time high, which means that there is a high probability. Again, it's not a guarantee. Nothing is guaranteed when it comes to this stuff, especially in the uncertainty in the investing world or the trading world for sure. But it's a higher probability that it's going to actually do amazing, absolutely amazing. And even if you take a look at year to date, Bitcoin has returned a really nice return of about, I don't know, right now it's probably about 250% plus minus a few percentage points. And because I looked at it last night, and of course things have shifted since then. And Ethereum at that time was 442. So it's like double of what Bitcoin did. And so I do believe that if Bitcoin is going to 10x, 10 to 20x is probably what might happen in this bull market as a whole. If that is going to happen, that means that there is a high probability that Ethereum could do 20 to 50x. That is an amazing, absolutely amazing return on investment. And of course, we do have some alts that could potentially do even better, because what we see doing is, of course, Bitcoin moves first, Ethereum follows, and then the alts just go bananas. So we could see, but alts are much more volatile as well, so they might move much quicker and fall much quicker as well. So be careful with that. Ethereum, of course, is much more volatile than Bitcoin, and Bitcoin is much more volatile than something like gold, and gold is much more volatile than, so everything has an upside and a downside, and, your investment is in whatever you believe in. I do believe in Bitcoin. I do actually think that there is some case for gold. I do think that there is some case for having a little bit of cash ready to go. And not because I believe that long-term cash is going to do miracles for you. I do think that inflation is going to pick up over the upcoming years, and especially in the 2020s, right? In the 20s decades. We're going to see some massive inflation that is going to destroy the purchasing power of the dollar, the euro, the yen, the yuan, and everything else, pending they don't turn completely digital, and then they can do all kinds of wonky stuff, which I also think is coming in this decade as well. So it's going to be an interesting decade for sure, but I do think having a little bit of cash aside, at least for a short term period, means if I need it, if I find a really good deal and I spot it, like great price for Bitcoin, that means I don't have to sell another asset to get it. And that's the only reason why I actually like having some of it. So that's kind of how I stand with it. We are still fighting deflation. We haven't entered inflationary period, which means if we're in deflationary period, that the case for dollar is still very, very strong on the shorter period of time. So I don't think destroying your cash completely is the best of the ideas. However, I don't know that I would have all of my wealth in cash either. Again, nothing I say here is financial advice, nor should be used as such. It's just the way how I view the world. So I do believe in having some cash. I definitely believe in having quite a bit of Bitcoin. Get as much as you can. But I always say to everybody, like, just get some, okay? Don't get crazy, but get some. But for me personally, I do have, on the liquid side, it's more on the crypto than anything else. I do think that gold also has some potential, and while there are long-term perspectives, I do agree with Michael Saylor that long-term perspectives on gold and silver might not be as bullish and stuff, because as the price keeps going up, more producers will go in, which means they're going to saturate the market even more, which means that the price of the precious metals is going to come back down, or at least cool off. So I do agree with that, but I also do agree that we still have a large enough population of elderly individuals who are stuck in their ways. Let's face it, the older we get, the more stuck we get in our ways. I know I am doing it, and I'm not even that old. But I am definitely doing it. So I think it's important to acknowledge that we still have quite a bit of baby boomers. Some of them, yes, like for example Max Kaiser, have switched over to digital currencies, and they're very bullish things like Bitcoin, for example. But not everybody is. Many of the people who are boomers are saying, you know what, man, I'm going to stick with stocks, bonds, mutual funds, ETFs, and a little bit of gold. And so they're sticking with that. And so because they're sticking with it and looking to potentially buy it and hold it, you know what? I don't care how I make my money, as long as it's legal and legit. I don't care. I'll invest in whatever, right? Politics has nothing to do with it, nor does love or emotion. If it makes financial sense and math sense, why not? Of course, not a huge amount of it, but nonetheless, I think it does have a potential over the next couple of years for sure. Longer after that, I don't know. It gets fuzzier after that, especially as we get into the space and start to mine it for precious metals. At that point, I think it becomes, fool's gold, as they call it. So I don't know that I would want to necessarily be part of it. The other one that I am incredibly also bullish on, especially long term, is real estate, which is why we do real estate show on Thursdays, every single Thursday, because I do believe that it holds a lot of power to maybe not, make you as wealthy as fast as Bitcoin, but it does have an amazing power to hold and preserve your wealth over time. And it does have a very long history. It's also a place where you can actually park a little bit of your money, be able for it to grow, that keeps pace with inflation and actually beats it, that it does give you passive income, that it does give you protection when it comes to your taxation, that you can reduce your taxable income. And so all of those things combined are really, really good. The additional piece is that real estate is one of the few assets that banks will still lend on even when things get really tough. Now, it's not going to be as easy. You might have to pay more. You might have to get a better picture. You might have to prove better income and that kind of stuff. But it's still something that you can borrow money on at much lower rate. And as inflation comes in, which I expect inflation to come in, what happens with the debt, which is also money, right? So there goes that. It gets eaten by the inflation, which means that what right now seems like an obscene amount of money, when inflation hits higher, it's going to get eaten and then you can pay it off very quickly. And I do believe that there is a good strategy that you can play around and play with by being able to invest in hard assets like cryptocurrencies, like gold, and like real estate. And this is the holy trinity in my personal book. And the reason I call it a holy trinity, I don't mean to be offensive to anybody and anybody's beliefs, but the reason that I call it a holy trinity is because when you actually enter into the space where now you have something that is stable, that has long hold value, that allows for you to access debt very cheaply, that then gets destroyed by inflation, and then you have another asset that appreciates, another two assets that appreciate at different pace within inflation or deflation whatsoever, that gives you an ability to have liquidity to pay things off very easily and be able to participate within the economy. So it's just sort of like a theory that I have and what I believe in. Again, you can believe in whatever you want to believe in or not. Now we're going to switch over to what's going on in the real estate space. So let's take a look at some of the numbers. The Zillow basically is saying that the typical home value is about $262,604. Some of the other analysis says that the average price of a home in the United States is at $335,000 to $350,000. So a bit of a discrepancy between the different markets, but that's what happens when you don't have a centralized entity, which is why I like Bitcoin and real estate for the same reasons. Decentralization and inability to corner it the way that you would think. Although I think Bitcoin might be easier to corner. That's at least for now until more and more people come in, at which point it's going to become much more difficult to do that. But we'll see. Change in typical home value from last year, we're up 6.6% year over year. So the average home price has appreciated about 7% since last year. This is a really, really nice level of appreciation. Typical is about 3% or so. So we've seen doubling in this sector, which is exciting. And of course, when you compare this to the Bitcoin being at like what, 500 and something, you were like, 7%, I'm not even bending over to pick it up, right? But 560% on $100 is really cool, but 6% on 500,000 bucks is also very cool. So sometimes you got to pay attention to the amount as well, but the percentage point is important. U.S. typical monthly rent is $1,751, and change in typical rent from last year is up only just shy of 1% at 0.9%. So the rental prices haven't gone up, and I think a lot of that has to do with the prices, with unemployment, with the challenges that we are seeing around the pandemic. But I do believe that as the price action, which actually has gone up, catches up to the whole thing, I do believe that we're going to start seeing increase in rental prices coming in short order over the next 1 to 3 years, roughly speaking. So real estate is a much slower moving market, makes it very interesting, the economy, to be both in something like crypto and in something like real estate, because you have something very fast moving and something very slow moving. And in my book, it just kind of it creates an equilibrium, equalizes it. So it's kind of an exciting part for it. Mortgage rates. Well, mortgage rates are about to being flat. They're going to remain flat. We could see some movement potentially. They're flat. Again, we had the statement from the Federal Reserve, Jay Powell, that had the potential to move the rates and bonds However, it hasn't. It barely budged, and the central bank stated plans to maintain the current pace of bond buying and commitment to keeping the federal refund rate low. They also did talk about the fact that they do believe that more fiscal stimulus is needed, that more money needs to reach more individuals. They are urging Congress to pass that. Congress still hasn't made a decision into it. So far, all of the things and conversations that have been happening had zero benefits to individuals whatsoever, and the whole spectrum of what's going on within the eviction stuff is basically non-existent. Of course, the mortgage rates are going to remain low, unlikely to shift. I do believe that we're going to remain low, and if we shift, it's probably going to shift mostly on the down end of things as opposed to the upside. So you can see kind of where we are right now. Oh no, no. You can see kind of where we are right now, and let me see. Come on. You can see that we have come down to 2.94. We were at 2.89 not that long ago, and I think there's going to be some room and potential for us to move into the section of lower rates. So I know Zillow is saying probably not. I'm saying probably yes. And I think we'll see kind of how it's going to roll out. But I think that also the part that I think is important piece to take into consideration is what's been going on with evictions. So let's take a look into this article and talk about it. That we have currently now between 2.4 and 5 million American households that are at risk of eviction in January alone, and millions more will be vulnerable in the months after that. And of course, why January is so important? Well, because CDC has put that sort of nationwide moratorium because of the pandemic that you cannot evict. Of course, CDC is being sued, and I do believe that that is going to turn into a class action suit, as it should. And I do believe that everybody who's ever been a landlord deserves to be back paid by either government or CDC on its own, although CDC probably can't afford it and it will bankrupt them. But I do believe that because, as a landlord, you are required to pay your mortgage, you're required to pay your taxes, you're required to do the repairs, you're required to clean up, you're required to pick up their trash, and all of that comes at a cost. The tenant, on the other hand, well, they don't have to pay. They don't, they can stay. And CDC made it so that it's indefinite. But of course, what we're seeing is a very, very complex and complicated situation. Some tenants are definitely taking advantage of the whole situation, but many are not. Many are not, and many are stuck. I do know that many landlords are trying to work with their tenants if the tenants are willing. But again, not all are, and so it's a very, very complicated and complex situation that I don't think it can be easily summarized that it's just this versus just that. But many in the industry expect that the CDC is going to extend the eviction ban, and I think that that is going to create an even stronger case point for the landlords to sue them, right? But we'll see how that's going to turn out. There are some others that also expect the courts to be overwhelmed once moratorium ends, and creating a months-long backlog of cases. In many cities and towns, the legal process is already underway, and while the CDC order helps keep renters in their homes, it doesn't prevent landlords to begin filing for evictions and starting the processes in court. Many courts have moved to the online version of it and are using visual stuff just like this for folks to basically hear the cases, which is really, really good, because when the pandemic started, everything kind of shut down and you couldn't do much of anything anywhere. I don't know if every court, if every area is doing that, but we are hearing that many of them are doing the virtual meetings and virtual hearings. Landlords have already filed more than 150,000 eviction petitions during the pandemic. Many of those tenants have lost their cases and are now on hook for all of their back rent. Evicted renters are liable for monthly unpaid rent, and it is estimated that in the U.S., tenants are owing as much as $70 billion in back rent. And of course, this number is going to continue to grow. The dollar amounts of unpaid rent in eviction cases in astonishing even some of the veteran judges who are issuing judgments against tenants owing more than $10,000 in rent payments. In the past, the ruling would be a fraction of that amount. So, of course, they are getting into it and not paying it. So, this is going to get very, very messy. We'll see how the whole thing is going to pan out. There are some conversations that the Congress is looking to potentially a new bill do both protect the tenant and the landlord, which I think would be a much better solution to the problem. But again, we'll see how that's all going to pan out. And the most interesting part that the article doesn't talk about, but I can talk to you from experience, is because many landlords have experienced, smaller landlords especially, have experienced a lot of the challenges around the payments and still having to keep up with it. Many of them have entered into a deeper debt. And of course, now that they are looking to go and refinance, they are getting scrutinized because banks are not lending to the smaller guys. And when they do, they make you jump through the hoops lit on fire, questioning everything. And what used to be easily approved in the past is turning into much more challenging situation right now. Well, that makes it kind of bearish on the moment for real estate. I do believe that it's a moment of dark clouds right now, and it does. Personally, I've been in the business for for a while, for well over well decades now. So I don't know. I got into it in early to mid 2000s. So not 2 decades quite, but we're approaching them for sure. And the interesting piece is that things are shifting, and what we're seeing is more and more of the larger companies taking over the whole landlord business, and more people saying, forget it, man. If this is how it's going to be, I don't want to play this game. I'm just going to go and cash in and get out. This sounds really lovely short term. Long term, where my fear comes in, is that less than 1% of individuals are going to own all of the real estate, and we're going to be basically turning into a land of tenants, where you're going to be responsible for paying everything and not owning anything. And at that moment, when that happens, those few that own properties are going to be in a much stronger position, a much stronger hand, because we're seeing it even right now with all of this money printing. The inflation that we have been experiencing has been all in assets. That is hugely benefiting those that own assets and hugely hurting everybody else that depends on paycheck, that depends on having to, earn and go to work in order to be paying their bills. So I do believe that if you can get into the assets right now, hard assets, assets that have ability to provide you with a paycheck, that are able to provide you with especially passive income stream and multiple streams of income, and if you can hodl through the hard times, do whatever you need to do to hodl through the hard times and really hunker down and bunker in and diversify your portfolio throughout different asset classes and come up with your priorities of how things are going to play out and get ready. And if you don't know how to strategize, hey, reach out to me on onedealaway.com. Super happy to help you with that stuff. That's kind of what I do for people, for myself, for the businesses, big, small, medium size, and really think through all of the problems, kind of how to set it up. While I can't tell you what you need to do, I can be the sounding board of let's come up with different scenarios and what means what. And for many folks, that's all they need. That's all they need is just a sounding board of let's talk through all the different processes and how we can or cannot do certain things. But I do believe that if you're able to hold on to your assets through these upcoming, we're talking 18 to 36 months, so it's going to be rough, y'all. It's going to be rough. I'm not going to lie. I don't think it's going to be rainbows, unicorns, sunflowers, and whatever. I think it's going to be rough times ahead. But if you can hold on to it, what is going to happen is that things are going to shift and the tide is going to start changing. I do believe that over that time period, Bitcoin is going to do amazingly well. Gold has a potential to do well as well. real estate real estate is going to be a tough one because of the evictions, because of deflation, inflation stuff. But if you can get yourself in the lower fixed rates, interest rate and stuff, as we switch over from highly deflationary and even deeper deflation in the upcoming months and potentially years, and start switching into the inflationary component, it's going to play out really quickly. So it's going to be very slow. It's going to be very painful. Sorry, I don't have better news. I apologize. And I could be grossly wrong, but this is just the way that I see it. But as that turns, as that tide turns, those that have hunkered down and have been able to make through it are going to get an amazing sort of flip of fortune, so to speak. And then that inflation is going to eat into that debt. And if you've played it well, strategically holding on to the multiple different assets, and really working on the plans of getting multiple streams of income, what that is going to do is skyrocket and all of a sudden turn everything from dust into a reborn phoenix. So maybe we should call it a phoenix theory. But anyways, here let's continue on with this article. Some landlords have said that they have offered installment plans to their tenants. Many have gone months without collecting any rent whatsoever, and of course cannot take control over their property. However, we are also experiencing that individuals are saying, look, I don't have a job, I can't pay you. So again, I really believe that just trying to blame one versus the other is not a solution. I think that we need to work together as group, as people, and really support one another. On the home builder confidence, we're seeing that we are slipping slightly lower from the record high, and we are going a little bit lower in the month of December. What we're seeing a dip is in the three main indicators. Prospective buyer traffic is saying that has dropped. Future sales over the next 6 months has dropped, and the current single family home sales has dipped slightly, and this has happened across all parts of the country, right? So east, west, south, north, it doesn't really matter. We are seeing it everywhere whatsoever. And it's kind of interesting that they are sort of splitting the country the way they are, right? If you're talking about four different ways, I would imagine it's like, north, south, east, west. But that is not what we have here. We have northeast, we have midwest, we have south, and then west. What happened to the center? What happened to the center? I guess we don't count it. Or do they fall into the Midwest or either part of the South, or not? Like, where do they fall in? Where do they fall in? So flyover states, yet again, get missed out by the big picture. Sorry about that. Not my article, y'all, but I deeply disagree with the whole thing. Of course, we are receiving other news from CNBC that refinance demands jump 105% for a year, and mortgage rates at 15th record low of 2020. So this is an interesting piece that is kind of coming in. Mortgage applications to purchase homes have increased 2% last week and 26% from a year ago. And of course, we're getting the rates are sub 3. I think we're going to continue staying low. And I don't see that there's going to be much of a changes. So I think we're going to stay kind of where we are. So one final piece that I did want to talk about is sort of, let's wrap up the 2020 when it comes to real estate and how does the whole thing play out. Where are we? What's going on? And the year has started very interestingly, right? What moved us? Well, remote work. We all entered the year sort of thinking, hey, this is all great, blah, blah, blah. China is having problem. Chinese problem turned into European problem. European problem turned into American problem. And American problem turned into a global problem. And of course, now we're all in the lockdown number 2, 3, 4, or 5. I don't know. It depends where you are located. We are seeing increased number of cases. Of course, we're seeing that the vaccine is coming in. There's excitement. Now we're seeing some problems with the vaccine, with some severe reactions to it. So, of course, who knows if the solution is near or far. Nobody really knows. Only time will tell. What happened also that the folks ended up either losing jobs, or those that didn't ended up going and working remotely. Well, working remotely created a high demand for not as much of an open space within the house, but rather for individuals to actually go out there and, seek their own sanctuaries. Kitchens, large, small, with a lot of storage space and deep freezers became the new normal thing that we want to have. Backyard became, a sanctuary and a must have. An in home gym was a really nice luxury that everybody wanted to have. And of course, if it didn't have space for the office, that gym very quickly, as well as the garage, became the office. So that is something that we can expect is going to continue because more individuals are saying this is important stuff for them. So, of course, remote work opened up new housing options as well. You no longer needed to live where you worked and you started to see some migration. Contrary to the popular belief, not everybody was exiting cities. Of course, where people exited cities predominantly were things like New York City, San Francisco. We've seen some from Portland, Oregon, Seattle. We've seen some from that. Predominantly, it was the Big Apple and San Francisco that saw the biggest exodus, and people started going into a slightly more suburban areas, close enough but far enough where they can still enjoy their own space. And of course, they wanted to do that stuff. This high demand and low supply, of course, created an amazing price increase into the homes where we've seen some areas boom as much as 20 some percent year over year. And of course, people were literally fighting, and we saw some record setting pace of selling the homes well above the asking price, where the homes were selling not in months, not even in weeks, but in hours, right? And sometimes in days, in a really slow market, as crazy as that sounds. Digital revolution in real estate has begun, but this is only the beginning, and I don't believe that this is where it's going to end. I believe that the digitalization of real estate as well as tokenization is just as its infancy, and it's going to go even higher, even faster over the upcoming months and years. 3D virtual home tours have spiked up 750% in the month after many stay-home orders went into the effect. Floor plans and augmented the shopping experience, and that became a very important listing tool and technique. And video tours instead of the private showings and open houses became the new normal. And this was not just for sales, this was also for rentals as well. The story was absolutely the truth. The single family, anything that had 2 bathroom, 3 bathroom, 4 bathroom, bedroom as well was important. We learned how to work from home, turning our kitchens into offices, closet space into meeting space, bedrooms into boardrooms, and we became very, very creative this year, as painful as it was. Of course, Zillow did find a divergence in rental markets when rent price growth slowed significantly nationwide, and it did slow down in urban zip codes much more than in the suburban areas since the beginning of the year. Of course, the pandemic did have an uneven impact for lower income individuals as well as women and minorities and Gen Z. Younger individuals also were seen as folks that started to kind of figure out different ways of how they're going to make money and where they're going to live. Privacy did become a luxury, and everybody wanted that stuff. And of course, the surveys are indicating that having a home or a place that has a designated office space or spaces is incredibly important for individuals, and that is something that we can experience that is going to remain part of the trends for at least 2021. So let's take a look at some of the very interesting things of what has happened. Well, here is not the birds are not the only ones migrating south. Its homes in Key West were favored 8.7 times more often than listings nationwide. It turns out that renters in 11 cities cared more about allowing dogs than the number of bedrooms. Things for you to know. In 2020, 1 in 8 people made offers on a sight unseen, where I remember telling you all that when I did that years ago, I was told crazy. Now, that is a normal thing. 41% of people say they valued a large outdoor space, and many people decided, hey, let's just camp in the backyard. 22% of individuals this year decided to refinance instead of sell. And this is and putting, of course, savings towards their education, interestingly enough. Of course, where do we like living? Well, from tiny towns to sprawling cities, entire state of Texas is people where wanted to go. So people were going and moving from New Yorkers were searching tropical places like Miami, and Las Vegas became the biggest increase in Zillow search traffic. So interestingly enough, we also found out that the Kingston, New York, so out of town search traffic climbed 116% this year, and out of town search traffic climbed 123% in Vernal, Utah. So we are looking for places to go. Texans search in state cities more when searching outside their local area. 74% of searches for homes in St. Louis came from, well, St. Louis, interestingly enough. Vacation designation page views were almost 50% up 50% from 2019, and there were 3.9 million searches for more than 4 bathrooms. Told ya, bathrooms are very important these days, especially in the age of COVID, where you need to sort of separate the bedrooms and the bathrooms. It became very important that people don't share any of that stuff. And of course, you wanted to have an office on top of that. In-unit laundry was one of the top search filters for renters in San Francisco, Boston, Chicago, and Seattle. In 2020, 136 people searched Zen Garden. So here you go. That's something for you to notice, that they are looking for any slice of heaven and peace that they can find. 2,253 people searched for double oven this year. I guess we just want to make sure we can cook as much as we can. And 3,232 people searched for natural light this year. Acreage was one of the top search filters in Knoxville, Nashville, and Bozeman. So there you go, something interesting. And Zillow-owned homes were toured nearly 80,000 times. Thousands learned selling their homes through Zillow offers was the much easier way to move. And of course, they were doing that stuff. And remember, we talked about that as one of the potential strategies for us. The creation of Zillow 3D homes tours climbed 152% from 2019. And of course, there are moats. People do want moats. And there's about 310 people that wanted moats. Who knew? There are some of us could probably look into the new construction. Here's to the 15 people who added not haunted to their home search. So there you go. This is what people are looking for and what's happening and what 2020 was like. So I hope you have had a fabulous 2020. I hope you're looking forward to 2021, and may us find all healthier, happier, more in peace, more in wealth, and more in progressive ways to figure out how do we make a better world, not just for ourselves, but for everybody else around us. I do thank you so much for being here with me. I will continue, of course, to broadcast, but I do believe that this just might be the last episode on real estate in 2020 because we're hitting some holidays, although who knows, I might surprise you, as I sometimes tend to do. Until next time, stay forever money blessed, and do remember, you are only one.